AM 1220, KHTS, FM 98.1, and hometownstation.com. Financial Hour. Dave, question. I know Jake was mentioning earlier about, $3,200 a month in rent or $2,900 in house payment. I mean, it makes sense, right?
Absolutely.
I love how he mentioned that. Is your rent when you were renting when you were younger? Did your rent ever go down?
Never once. It didn't ever go down.
It only went up, Jake?
Yeah. Rent tends to trend up. It usually never goes down. And the other thing, I think a homeowner, somebody who's considering going from rent to buying a home, another thing you really got to look at is the appreciation. Getting in a house now, traditionally, if you look at the long-range goal of owning a home, that's an asset that will more than likely go up in value. If you look at the rate of appreciation in California, it can be anywhere from 5 to 6% a year, Fred. So take that and compound it out. If you're in a house for 10, 15, 20 years, whatever you think you might be there, the amount of appreciation that asset will collect as opposed to rent, where it's just paying money and that property's appreciation for the landlord and not for you.
Yeah.
And Jake, also, there's a tax benefit to buying a home too, right?
Yes. And that's something you'll want to go over with your tax preparer, tax advisor. From the mortgage interest to even the PMI or the MI being a write-off, that's something you'll want your tax preparer to know, but there's definitely advantages there that rent just does not offer.
Right.
Jake, there's this myth again that if you are self-employed, it's really hard to get a loan, but in reality, it's very like employed people. It's just that, there's actually some ways, through it that helped you. What are some of those ways through being self-employed and buying a house?
Yeah, good question. Over the last year or two, Fred, us lenders have really seen the credit box starting to open up considerably more for a self-employed borrower to get a home loan. Shoot, after the 2008, 2009 economic meltdown, many people out there who are self-employed know, man, it was hard to get a loan. And so you'll see a lot more mortgage products have come on the market to help people that are self-employed. A lot of them are something called non-QM loans. Those stand for non-qualified mortgages. And what that simply means is they're loans that aren't necessarily underwritten to the government standards that Fannie and Freddie have. They're loans that are definitely underwritten. They definitely have to make sense for the bank or for a lender to take on. But those loans are out there that weren't there several years. It was really hard for self-employed people to get loans. But Fred, if I could, let me just share a current example of somebody I helped in Santa Clarita that was self-employed that traditionally would have had a hard time getting a home loan, but we were able to help them out. I had a gentleman who, about 15, 20 years, he worked in flood restoration. He worked for a company. He was employed. He made good money and decided he wanted to kind of do the American dream and open up his own company. And he was self-employed. He was making for only less than a year, Fred. And traditionally, that would be really hard for somebody in that position who just transitioned from employment to self-employed borrower to get a home loan. He came to us, and because we had a couple different options with different lenders, specifically a credit union that was willing to look at his file and say, you know what, boy, he's putting a significant amount of down payment. He's got a long history of doing this type of work. He has a great client and book of business that he's built up. And they felt comfortable doing that loan. We were able to articulate to a credit union why this loan made sense for them to take on. And so we were able to get a gentleman who'd only been self-employed for about 8 months. We were able to get him to a nice home in Santa Clarita with a really low rate. And that's just the fact of knowing, what lenders have what appetite to take on what loans, and knowing how to kind of put the file together and explain it correctly to a lender.
Love that.
Yeah,
Jake, the ability to repay. He had the ability to repay.
Right.
And that's what the lender looked at.
And that's one of the most important things, is being able to repay the obligation. Right. And if you're in a good situation, and this person was, like I said, the credit unions and some lenders will take a look at that.
Yeah.
The other thing I wanted to just point out, guys, I'm seeing a lot of even Fannie Mae, some of these government entities that take on loans for self-employed borrowers, they're not as restrictive as they have been in the past. You may be able to get a loan for being self-employed for 1 year, if it makes sense. If you, let's say, were a mechanic and then opened up your own mechanic shop and you've been doing it for a year, there may be a Fannie or Freddie loan that your lender can help you get into. You just have to talk to a lender who knows what they're doing and explain your situation. I think the last thing I wanted to point out, whether it's self-employed or going back to your first-time borrowers or buying without 20% down, you guys, you really have to look at interest rates. With this COVID-19 environment that we're in, one of the ripple effects is it's dramatically driven down mortgage rates. We're seeing interest rates that are near as low as we've ever seen them, ever. And so I think those people listening out there need to know that now, whether you're buying or refinancing, interest rates are on sale. And so if it is all possible, you want to look at whether it's restructuring your debt or buying a home, taking advantage of where the rates are. Because shoot, even a year ago, we were looking at rates close to like 5% on a 30-year fix. Now you're talking mid to low threes, Fred. It just makes a lot of economical sense to get into something now, or even refinance and restructuring your debt or pulling cash out. But you want to talk to a lender to go over the options. But boy, interest rates are on sale.
Yeah, without a doubt, especially when you add up the minimal closing costs and the APY, it'd be just slightly higher than that. Yeah, money's really inexpensive. Jake, those that want to reach out to you so you can get it pre-approved and get them into that home of their dream, how can they?
Yeah, my direct dial is area code 661-505-4303. 661-505-4303, or Jake at AFFloans.com.
Jake, thanks for coming on. I know you were going to come in the studio, but you got to help a few clients out getting into a pre-approval. So thanks for calling in.
Thanks, Jake.
Hey, thanks, Dave. Thanks, Fred.
You got it. Take care, buddy. Well, if you enjoyed this quick edition of the Special Finance Hour with Jake Young on 98.1 FM and AM 1220 KHTS.